Welcome back to Explain the Charts, where we break down complex market movements. Today, we're taking an in-depth look at Apple, ticker symbol Apple, a stock that always commands attention. As of August 6, 2025, the big news revolves around Apple's recently reported Q3 2025 earnings, which were, by all accounts, exceptionally strong. The company exceeded analyst expectations, with revenue hitting $94.04 billion, marking a 10% year-over-year increase, and diluted earnings per share reaching $1.57, up 12%. This impressive performance was largely driven by double-digit growth in iPhone, Mac, and services revenue. Despite this stellar financial report, the market's reaction on the surface has been somewhat perplexing. Let's switch to the daily chart and get a broader view of Apple's price action over the past year. Now, zooming in on the recent daily candles, specifically around the Q3 earnings announcement. Apple released its strong Q3 results on July 31, 2025. However, if we look at the candle for August 1, 2025, following the report, we see a significant bearish candle with a close of $202.38, marking a more than 4% drop for the day. This is a classic sell the news event, or perhaps a deeper market reaction to unstated concerns, even amidst robust earnings. The price continued to drift lower over the next few trading days, closing at $202.92 on August 5, 2025, our latest available data point. To truly understand the magnitude of that post-earnings plunge, let's switch to the 15-minute chart for August 1, 2025. Here, the sharp decline is even more evident, illustrating the rapid shift in sentiment immediately after the open. The stock opened at $210.865 that day, but quickly tumbled, carving out its daily low around $201.5. This rapid sell-off, despite the fundamental strength, highlights that technical reactions often precede fundamental clarity. High volume accompanied this drop, indicating strong conviction from sellers. Observing these shorter time frames helps us identify the exact moments of market stress or opportunity. Returning to the broader daily chart, let's discuss overall trends and key price levels. Over the past year, Apple saw a significant uptrend from March 2024, peaking near $260 in late 2024, which aligns with its 52-week high of $259.02. This was followed by a notable decline in early 2025, reaching lows around $170 by April 2025. Since then, Apple has been in a recovery phase, climbing back to the $200 to $210 range. Analyst sentiment reflects this mixed bag. While there's a consensus, moderate buy, with an average 12-month target of $237.25, some cautious forecasts point to $140 to $160 due to potential risks. The range of $170 to $300 for analyst targets truly shows the uncertainty in the market. Now, let's incorporate technical indicators as of the latest analysis. The current price of $202.92 sits significantly below the 50-day moving average of $218.97 and the 200-day moving average of $227.63. Historically, prices below key moving averages are often seen as potential value buying opportunities, but also indicate a current bearish trend. The Relative Strength Index, or RSI, was recently reported at 76.28, signaling the stock was in overbought territory just before this latest drop, which warranted caution. Following the recent decline, this overbought condition might have alleviated somewhat, but the prior high RSI indicates it was due for a correction. Furthermore, the MACD reading of -3.87 with a signal line of -6.37 suggests persistent bearish momentum, reinforcing the caution indicated by the price action. Identifying crucial support and resistance levels is paramount for trading decisions. Looking at the daily chart, the immediate support level to watch is around the $200 psychological mark, which also correlates with recent lows. Below that, the April 2025 lows in the $170 to $180 range represent a more significant historical support zone. On the resistance side, the recent high around $215 will act as immediate overhead resistance. Beyond that, the 50-day moving average at $218.97 and the 200-day moving average at $227.63 will be formidable barriers for any upward movement. These moving averages often serve as dynamic support and resistance, shifting with price action. Despite the recent technical weakness, there are compelling reasons to be bullish on Apple in the long term. The strong Q3 earnings, particularly the double-digit growth in iPhone, Mac, and high-margin services revenue, underscore the company's fundamental strength. Apple's strategic focus on integrating hardware, software, and services enhances user engagement and recurring revenue streams. The anticipated rollout of Apple Intelligence is widely seen as a significant growth driver, potentially reinvigorating sales across its device ecosystem, which some analysts predict could push the stock towards $280. Furthermore, continued expansion in emerging markets like China and India presents substantial long-term growth opportunities. The company's immense free cash flow of nearly $93.8 billion provides ample liquidity for strategic initiatives like dividends, share buybacks, and potential acquisitions, showcasing robust financial health. Conversely, several factors warrant a bearish outlook, especially in the short term. The most immediate concern is the significant price drop following the strong Q3 earnings, which could indicate deeper underlying worries not reflected in the headline numbers. Concerns like intensified competition in the tech space, potential delays in the rollout of key AI features, or even the subtle declines in iPad and wearables revenue could temper enthusiasm. Global economic conditions, including inflation and interest rates, remain a significant risk, potentially impacting consumer spending on premium Apple products. The company's reliance on overseas manufacturing, particularly in China, creates supply chain vulnerabilities and exposure to tariffs, which incurred $800 million in Q3. Finally, the ongoing class action lawsuits filed between June 2024 and June 2025 add a layer of legal uncertainty. These combined factors create headwinds that could prevent a rapid recovery. To recap the important price levels for Apple. The current trading price is around $202.92 as of the close on August 5, 2025. Immediate support lies at the psychological $200 level. If that breaks, the next major support zone is between $170 and $180, based on the April 2025 lows. On the upside, immediate resistance is at $205 to $208, followed by the 50-day moving average near $219 and the 200-day moving average at approximately $228. In the short term, a continued consolidation or slight dip towards the $200 support level is likely. The bearish reaction to strong earnings suggests a sell the news event, or perhaps a broader market fear taking precedence. A rebound would be reinforced by positive news on AI implementation or a general strengthening of the tech sector, pushing past the $215 resistance. However, a breakdown below $200 could signal further weakness, potentially testing the $170 to $180 range. This is roughly a 60% likelihood of sideways to slight downside in the very short term, with a 40% chance of a quick bounce if bullish news clarifies market fears. For the long term, our outlook remains cautiously bullish. Apple's robust ecosystem, financial strength, and innovation pipeline, especially with Apple Intelligence, position it well for future growth. The average analyst price target of $237.25 suggests a potential upside of nearly 17% from current levels. However, investors should closely monitor global economic indicators, any new developments regarding AI features, and how effectively Apple navigates supply chain challenges and competitive pressures. Key upcoming events like potential new product announcements or clarity on their AI strategy could serve as strong catalysts. Always remember to conduct your own thorough research and consult with a financial advisor before making any investment decisions. Thank you for watching Explain the Charts, and we'll see you in the next one.